guys, this is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. In this video, I'm back again continuing to analyze constituent of Straits Times Index. As so happened, it is also requested by two viewers. Today I'm going to talk about Yangzijiang Shipbuilding Holdings Limited with the stock symbol of SGX BS6. Okay, my quick takeaway for this company. The first one is it is a unique kind of shipbuilding company that has significant income from investment. Two, it is a stable company, means that it is neither growing nor declining. Three, it is a great dividend stock with decent and stable yield. However, I'm currently not that interested in making any position as it's rather expensive now. So follow my video as I quickly discuss the company's profile, EPS since 2006, dividend and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspectives and learn more. Okay, before getting into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my journey learning and practicing investing from scratch. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your research, hope this video will help you to do that. Okay, now let's start from a quick company profile. According to its website, Yangzijang Shipbuilding Holdings Limited history started in 1956, through the establishment of Jiangyin Urban Shipbuilding Production Cooperative. Back then, the company's business was concentrated in chartering and supplemented by repairing ships. Then 2 years later, in 1958, Jiangyin Transportation Machinery Factory was established. Then, in 1962, the enterprise was renamed Ship Repairing Yard, with some changes in the business. Then in 1976, it is renamed as Jiangyin Shipyard. Fast forward to 1992, after cooperating with Jiangsu Shipbuilding Industry Company, the shipyard decided to operate independently. Then in 1999, the company became Jiangsu Yangzijang Shipbuilding Co. Limited. After various development, the company is then publicly listed on the main board of Singapore Exchange since 2007. And the company is currently headquartered in Yangzijang Industrial Park, Jiangyin City, Jiangsu Province, China. It sounds to me that the company is still like a family business. In 2020, the previous executive, Ren Yang-lin, hope I pronounced his name correctly, retired and replaced by his son that we have here, Ren Le-tian. From the company's profile in its 2020 annual report, the group is primarily engaged in the construction of commercial vessels, including container ship and dry bulk carriers, actively building up its capabilities in the design and construction of mid-sized LNG carriers. And then its customers are primarily ship owners from the countries listed down on the screen. There are so many of them. Furthermore, it has also the following business that support its core shipbuilding business. The first one is fabrication of large-scale steel structures, and then shipping, logistics, and vessel chartering, and ship design, trading, and shipbuilding related materials. Now the interesting part is that its shipbuilding business is complemented by management of its treasury portfolio of debt investments as amortized cost products. It sounds to me like a financing role for its client as well as running hedge fund to support the shipbuilding business. And finally, something that really important for sustainability, is the installation of grid-scale battery. Unfortunately, the majority of the company's energy usage is still coming from non-renewable source. As the table here we can see that there is no significant increase in solar power production since 2018. As of 31st of December 2020, Yangzijang largest steam shareholder is Ren Yuanlin, who is the former chairman with 22.24% holding. Another significant holder is here we can see Wang Dong with 10.24% holding. Okay, I hope I pronounced the name correctly. Okay, from the shareholder statistic, most of the largest shareholders, as we can see on the screen, are hidden behind custodian accounts. One name that jumped out to me is the 16th largest shareholder, that is Chandri Anastasia, which kind of ring a bell. A little Google search, the name Anastasia Chandri Liu is the founder and managing director of Bengawan Solo, the famous cake shop in Singapore. Though I'm not that certain that these two names are referring to the same person. Okay, so that was a brief company's profile. Now let's continue with the company's performance. Okay, as usual, so here I plotted Yangzijang earning per share for the last 14 years, since 2006. That is a year before it became a public company in 2007 in SGX. I also added, as usual, a horizontal green dashed line as a guide to zero level. Earnings below this line indicate that the company is recording a loss for that particular year. Okay, in its early year after becoming public, Yangzijang had a phenomenal growth. Its earning quadrupled from 2006 to 2011. Okay, but before that, we need to take note that since 2006, the company has never recorded any loss. Okay, now let's move on. Okay, since then it had been sort of flat with some consecutive years of dip in earnings. I like to figure out the company's earning dip as a window to measure the company's resilience to changing situation. So now let's take a look at those dips closer. The first one is 2012 and 2013 dips, after the company meteoric rise in the previous 5 years. In 2012, the company had reported a difficult year for the company's client, which results in cancellation of 4 shipbuilding contracts. The company delivered 51 vessels on that year in 2012 compared to 62 vessels the previous year. The difficult year seemed to continue to 2013, where the revenue from shipbuilding is still in decline. Number of ships delivered also goes down to 34 vessels. From 2012 to 2016 seemed to be the worst period for shipbuilding industry. There was a lot of supply but not many demands. This crisis was a carry forward from 2008-2009 financial crisis. There were too many ship supplies that there were only a few new ships ordered. The company reported a lot of shipbuilding companies exited the business. I think this is a gold nugget of information that gave me a clue on how resilient this company in facing the crisis. For 2020, I don't see much clear explanation about the dip in their annual report. They did mention that their operation was impacted by COVID-19 and there was a decline in number of ships delivered as compared to the previous year 2019. Okay, that was the EPS history since 2006. Now let's look at the company's dividend history. Okay, to see the sensibility of dividend payout, so here I plotted 3 layers of information as usual. Okay, the first one is the dividend payout over the last 13 years since 2008, which are plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The number above the markers are the dividend payouts in Singapore dollars, and the ones below are the payout ratio to the respective year's earning per share. As a comparison to its earning here, I plotted back the earnings per share as a thinner red line with the same color, red. Okay, let's look at the screen quickly. I can see that Yangzijang is really prudent in their dividend payout. It distributed maximum of 40% of their earnings as dividends, so it's pretty cushy buffer. Okay, over the year has given a quite stable dividend payout. They range between 2.6 cents to 5.5 cents and had never skipped any payout since its listing in SGX, which is a good thing. Okay, now that is what a dividend hunter might be waiting for. Here I plotted the average dividend yield per year as the round markers. At each markers I place an error bar which represents the range of yields over that year. The variation in a year is caused by the volatility level of the share price. The yield increases if the share price decreases and vice versa. Okay, we can see that the dividend yield is definitely better than bank interest. Depending on how good is your market timing, getting 5% yield doesn't seem to be that difficult. One thing to buy at low price. Okay, even that majority we can get around 3.5%. Okay, now let's continue with the reasonable price. Okay, to see Yangzijang market valuation, here I plotted 4 layers of information as usual. They are: the first one is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Yangzijang share price and it will pop me with this graph. Yes, similar to this graph at least, okay? But price alone, as we all know, sometimes misleading for the value of the company and its prospect. So I'll include some fundamental indicators to help me to decide. Okay, the second layer of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earning, that is the PE ratio, is at 10. For me, I consider 10 times earning multiply has two purposes. The first one is that it indicates that the price where I expect, where I have higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is 5 years. Okay, second, as a consequence for the first reason, I'll consider share price above this 10 earning multiply to be expensive. Okay, the third layer of information is its 15 times earning multiply. With the same principle as 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. Okay, the fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I would consider the share price to be super expensive if it ever crossed this line. For non-growth company, I consider to cut down my position if this happened. Okay, so now let's see what's going on with Yangzijang share price. At a glance, I can see that the market is pretty cautious about Yangzijang valuation. It has been in the realm of undervalued since its IPO in 2007. High company growth until 2012 was not followed by increase in its market valuation, as such that the earning increase from 2007 to 2012 was not followed by stock price increase. It seems that the market has some kind of premonition that the earning will be dropped a few years in the future. So I kind of getting the feeling that market consensus for Yangzijang is not a growth company. Okay, so for constantly undervalued stock, I added here fundamental indicator that I rarely use, that is the 5 times earning multiply or PE5. We can see that it acts as the support level for the stock price. Historically, since its IPO, the share price seemed to follow 5 times earning multiply. On a few occasions, it shot up beyond 5 earnings multiply or P5. That is, the first one is in early 2011, and then mid to late 2017, then mid 2018 till early 2019, as we can see on the screen, then late 2020. In all of those spikes up, the price resisted by the 10 earnings multiply or PE10. Similar thing might happen to the latest share spike. That is resistance level around $1.8. Yeah, at the PE10. Okay, so if I would put a reasonable price, I would place around 90 cents per share. It seems that for the company, that's the low enough price as well. As of the second quarter of 2021 company's presentation, it had exercised 4 million share buyback at average of 9.75 cents. In that sense, that amount, 9.75 cents, probably a more reasonable entry point. Okay, considering the current share price at 1.43 Singapore dollar, okay, as of 20th of August 2021, when this video was prepared, the current price is rather expensive. Okay, now wrap up. In conclusion, what do I think about this company? Okay, the first one is that it is a reasonably stable company. Yeah, with a reasonable dividend payout history, as we have seen in the discussion just now. However, it is currently rather expensive for its performance. It's not a high growth company, as we can see from its EPS. So I'm not interested in making any position at Yangzijang right now. I might reconsider if the share price is closer to the support level. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you and it means a lot for me. Okay, that's all for today, and bye.